Welcome to Money Talks. I'm Genevieve Westcott, bringing you up to speed with the latest financial news from across New Zealand and around the world. Coming up, the Ports of Auckland dispute is now biting into our economy with no end in sight. Consumers are paying the price. Will the madness ever end? A free trade deal with South Korea continues to elude our politicians despite top-level lobbying. What's at stake for our agricultural producers? And New Zealand GDP figures are lower than expected. What's happening to growth in the New Zealand economy? Joining me today is Murray Weatherston, economist and director of Financial Focus, and Hamish Gow, professor of agribusiness at Massey University and the director of the Centre for Agribusiness Policy and Strategy. Two giant brains. Good to have you on the show, gentlemen.
Thank you very much.
And let's start, Murray, here at home in the New Zealand economy. The New Zealand trade surplus out, and it is continuing to shrink. What's going on?
Well, I think we've actually had the best results on the trade surplus that we're going to get. The deficit, over the next couple of years is going to blow out quite a bit more than where it is now. We've had good agricultural prices. We've had reasonable volumes of exports. Import volumes have fallen a bit because of the domestic economy being slack. But I think as the domestic economy picks up, we're going to suck in a lot more imports, and the trade surplus is just going to continue to decline. So we've actually had the best days for a while.
What do you think, Hamish?
Oh, I'd agree. I think the agricultural situation, though, it needs to grow, but we've got pressure coming on us, certainly in the dairy space where other countries are going to start responding. And so we need to sort of recognise that that's going to change and put pressure on the marketplaces for us.
Yeah, we know that global dairy prices continue to come down and continue to soften. Where's it going to end this year, do you think?
Well, I'm not sure, but I'm sure what will happen is the prices have been so high that other countries are going to respond, and we'll see a supply response from them, which will put a lot of pressure on New Zealand because we're just naturally a trader. And so internally within those markets, local producers will respond to that. And that's one of the questions for us in New Zealand is how do we actually start producing inside some of those markets to support those markets?
Well, I'll tell you one thing we could all do is get the Ports of Auckland back to work. This dispute is now really affecting the economy. Tell me more, Murray.
Well, I mean, it's a sort of a classic management union battle. I frankly think the end result will end up with the union being all made redundant, but they just have to go through the correct process. There's precedent for a company to be negotiating with outsourcing at the same time as it's negotiating a contract with its existing workforce, and I've got no doubts that the end game will be that the union will be gone and that they'll be contracting out, and it's just going to take 3-4 months to get to that position. At
some point, does the government have to get involved and say, everybody's going back to work?
Well, I would think that would be the worst thing that could actually happen. They've really got to sort it out once and for all. It's pretty clear in the union space or the labour space, employment space, that a firm is allowed to organise itself as it wishes. And I think the Board of Ports of Auckland have expressed very, very clearly that they want to have contracting for the stevedoring. And so long as they follow the right process, they will eventually get there.
I think what we've got to do is we've got to, like Murray's saying, you've got to let these two groups bang it out between each other. I think there's got to be a recognition by the unions that we're becoming uncompetitive in New Zealand with how tight and strict labour laws we've got, structures we've got here. Europe and the unions there have been able to create greater flexibility where you have a total pool of hours and you can work against those with greater flexibility, and when you fill your total quota for the year, you then go on to overtime, as opposed to our one, which is on a daily basis. And so there's possibilities for different ways for the union to come back to the port company and give different offers to them, but right now I think they're being very inflexible.
Let's move on. Let's talk about NZ GDP figures. They're also not looking very good, Murray.
That's right.
Are you concerned?
Not really. I think the figure that came out was pretty anemic. It was 0.3% for the quarter. It wouldn't surprise me if there was a bit of too much the previous quarter, which was up about 0.7, not enough this quarter, bit of timing sort of differences. The economy looks like it's running at about 2% a year, which is better than being zero or minus, but still not very flash.
Agriculture was a very strong performer. It was up, 3.5% during the quarter, mainly due to increased milk production. Dairy continues to drive this economy. Good or bad?
The dairy industry is becoming a very dominant player, and potentially we're actually moving to a stage where we may actually be moving to a Dutch disease issue, where we've actually got an economy which is almost driven too much by dairy. That's one of my concerns. I don't think we've quite reached that point yet, but it's one of the concerns that a number of us are discussing.
Murray, is that a concern that you have?
Well, I think we should be thankful that dairy has been so strong over the last few years, because if dairy hadn't been strong, where would have been without it?
If we didn't have strong dairy, where would we be today? Give me some numbers.
I would say we'd clearly been in recession, and as it is, the economy at December was only the same level as it was December 2007. So in 4 years, we've gone nowhere. We went down and then came back up again. Without dairy, we would have gone down and kept on being down. So, who knows how much lower. It might have been 3 or 4% lower than where we are now.
Meanwhile, our politicians are out looking for more free trade deal. But John Key, who's been in South Korea, hasn't had much luck in getting that free trade deal signed there. It's been 2 years now. They've done the deal with the U.S. and with Europe. Are we ever going to sign anything? What do you think, Hamish?
Well, I think at the end of the day we will. I think we've got a good team out there who are negotiating these ones. I think the Trans-Pacific Partnership and the bilaterals with countries like Korea will happen. It's just a matter of time and being able to deal with the details, and it's all in the fine details of these negotiations.
But I think it's a much bigger deal for New Zealand than it is for Korea.
Sure.
I mean, Korea they're playing the game with Europe and America. We're small beer. I had a quick look on the net this morning to find if I could find any stories outside of New Zealand on the New Zealand-Korea free trade talks. Couldn't find anything.
Not a thing.
And so this is a domestic consumption story, not a international deal breaker.
Interesting, Murray, that one of the things that John Key is offering the South Koreans is food security. That'd be good for them. We want to talk about food security. It's a big deal in the world today, correct?
It is a big deal in the world today, but New Zealand can only, at the moment, feed about 20 million people, which is the size of Mexico City. So we can offer it up, but can we deliver on that? That's a different question. We're
going to talk about that after the break. Thanks, Hamish. Coming up, myths in the markets. Where are the opportunities in the changing world, really? Should we be selling top-end, value-added, expensive products to a hungry world? We drill deep. But first, answer this in our Farmers Facts and Figures quiz. South Korea is important to us because of a couple of niche markets for Kiwi products. What are they? Stay tuned. Welcome back to Money Talks. Just before the break, we asked you, what 2 niche products do we supply to South Korea? Deer velvet, worth $25 million a year, and our biggest market, and green lip mussels, worth $23 million a year, our second biggest market. We're back now with Murray Weatherston and Hamish Gow. Question: how does New Zealand Inc. leverage our international comparative advantage and core competencies to remain competitive on a global basis? Talk time, starting with Hamish. Hamish, what do you think?
I think we've got to come up with different business models for engaging in marketplaces. And so in the long run, we can't just look at being an exporter of physical product out of New Zealand. We've actually got to start thinking about how we get our technology and production base moved overseas into markets. And so we deliver from market into market in verticals going north-south. So South America to North America and North America to North America, and the same thing going around the world. And there's really good examples of that with inside New Zealand with some companies that are doing that at the moment within the dairy space with Fonterra and LIC, etc. In the grass seed space with PGG Wrightson's, and then overseas with groups like Chilean blueberry growers and Michigan blueberry growers and the strawberry growers who are all working together to create verticals.
Now this is very interesting, verticals, because typically in North America there's an east-west channel. They grow stuff in California and I can buy it in Toronto on the other side of the country. You're talking about a north-south dynamic, and that's what New Zealanders need to think about. Give me an example.
In the blueberry space, the Michigan blueberry growers who I used to work with have now partnered up with Chilean blueberry growers, to both deliver into the market but off-season to each other, and they've actually brought in California and Mexico so they can actually now supply for the whole of the year with a set of different windows. And what's really interesting is there are 3 different cooperative groups who have now created one collective brand and joint ownership of the IP behind that for both the process as well as the varieties of blueberries. And now they're actually partnering together as they move through in Africa, Europe, north-south, and then from in Australia into Asia, north-south vertical.
So that's one way we maybe have to think about a new business model. I think there are a lot of myths in the markets here in New Zealand. One of them, that we have very safe food and have a clean, green image. True or false?
By and large, true. We're not 100% clean and 100% green, but we're a hell of a lot cleaner and greener than a lot of other countries.
I feel comfortable sitting there and saying that we're clean and green to a level, but I wouldn't want to go and sit there and say we brand that as 100% clean and green. Because if you sit there and say 100% this, you can't afford to have any failures. And so it's a risky proposition to sit there and put the whole brand of New Zealand on that. For an individual company, I think that's an okay thing for them to try and do, because if they fail in their delivery, the company goes bankrupt. What we can't afford to do is for a whole industry and a whole country to go and put ourselves at risk in that same space.
Here's a question I want to ask both of you. Are we heading towards a dairy bubble? Hamish, I know you feel strongly about this.
I do. It's interesting. Last week I was talking to my father, who's a past farm management professor, and finding out what the prices were with dairy farms. And there was a dairy farm in the South Island, or a piece of land in the South Island, which got sold for $46,000 per hectare, undeveloped, for conversion into dairy, needs irrigation on it. That's an extremely high price. And then there's another one of our friends has just purchased purchased land again for conversion south of the Rakaia River for $29,000. Doesn't need irrigation. And he's done the numbers on that, and they think they'll get about 11% return on investment. And that property is right next door to his farm. He can pick up his farming system and put it straight across. His farm manager and Share Milk understands the system right next door. And so when you look at that, there's not a lot of risk in the guy who's buying at $29,000 and moving a system right next door, no irrigation, and convert it across. They've done it before. They know how to go and do it. They know exactly all those systems. There's a lack of uncertainty. But $46,000 for a group to come in and invest in land that needs irrigation and full conversion, that's a fairly risky proposition.
And it changes the way farmers act and behave, is your theory?
I think the tax structure in New Zealand is one of the ways that we're seeing farmers invest in land and invest in capital gains of land, which goes back to Murray's point. It's a safe place to invest, right? And you can reduce your tax burden, and you can defer it to the point that you don't have to pay for it. It becomes a really, really solid retirement savings structure. And institutionally, that's how New Zealand's been built. We've structured it that way. It goes right back to the ballot blocks and after World War I and World War II. That's how New Zealand's built wealth. But the question is, if we have to go overseas and we need to invest overseas with foreign investment going overseas to build these new models, does today's institutional structure meet the requirements of what we need in the future? And that's something which New Zealand needs to debate, and debate soon.
Okay, let me talk a little bit about a couple of the other myths that I think that we all operate under as Kiwis. Murray, you may agree or disagree. The myth that we can simply continue to grow our economy by exports. We can just export more and we're going to make it in the coming generations. True or false?
Half true. I think we have to export more and we have to be able to compete more against imports. So it's that whole international space, the traded goods space, that we need to get better at. And without exports, just like the dairy in the recent past, if we hadn't exported as much as we had in the past, New Zealand's standard of living would be nowhere near the level it is today. So exports actually are important. I think the bigger myth is that New Zealand is very export dependent. It's something like 30% of our economy or our GDP is accounted for by exports. Lots of other countries are up at 60 to 70%. That's not saying we've been doing badly. I think it's just that, if you're in the middle of Europe, you put your stuff on a truck, you make something in your factory and you put it on a truck and you drive it for 2 hours and you're in any one of 5 different different countries. We just happen to be at what I call the bus terminus, or at the bottom of the world. You know, we're not really close to anything, and so it's much harder for us to, you know, get that exporting into other countries.
We'll come back to that, Murray. Thanks. Coming up after the break, future proof on the highways and byways of the economic world, as our experts point out what's coming up. But first, answer this in our Farmers Facts and Figures quiz. Name the high-flying director from Fonterra who's joining the board of Rabobank. The answer after the break. Easy. Welcome back to Money Talks. Just before the break, we asked you, name the high-flying Fonterra director who's joining the board of Rabobank. Sir Henry van der Heyden becomes a director of Rabobank. And now it's time for Future Proof, beginning with dairy giant Fonterra, presenting its half-year results on Thursday. And the share market will be looking for a firm steer on whether Fonterra's contentious share trading among farmers scheme, or TAF, is a goer. Analysts say they particularly want to hear what recently appointed Chief Executive Theo Spearings has to say about the dairy giant's direction, given uncertainty around share trading among farmers and China's economic slowdown. Let me start with you, Murray. TAF, good or bad?
I actually think it's a crazy attempt to introduce competition where it doesn't naturally exist. So with dairy shares or Fonterra shares having to be held by, you know, farmers or shareholders who are providing milk, given that the people who hold the shares are also the farmers, you don't actually have a problem at the moment of distinguishing how much you pay for milk and how much you put into manufacturing margin. If the share market wants to get into the manufacturing part of the business, the private investors want to get into that part. The farmers don't want to give up any control, and there's just sort of this artificial TAF that they're trying to introduce, which just seems to me to be crazy. Yeah,
and the investment community itself seems really divided on this issue. So, there's no clear consensus still after months and months of lobbying and discussions. But interesting, Theo Spearings says that he needs that steady capital in the business if Fonterra wants to expand. What do you say, Hamish?
He does. He needs a substantial infusion of capital into Fonterra. If Fonterra is going to grow fast enough to stay at the same space as a preferred supplier to their major trading partners like Nestle, etc., around the world, they're going to have to grow outside New Zealand. And so he's going to require a large infusion of capital to be able to fund that expansion and fund the development of a production base in those countries.
Question, is TAF the answer?
There's some real questions at the moment, which Murray's alluding to, and part of this relates to the whole at the moment it's a one-to-one relationship between a kilogram of milk solids and one share price, right? And so it's a transfer pricing issue that they've got at the moment. At the moment they've got a small dividend and the bulk gets paid as milk price. Yeah. And so what that's done, and it's worked very, very well for Fonterra to incentivise farmers to invest on land and capitalise land and grow production. And farmers have benefited substantially from that, and that's grown the dairy industry, and we've seen a lot of conversion going across New Zealand on that space, and it's worked really, really well. Now, the question comes is if you now go to a TAF process and you suddenly separate the shareholding from the milk check, you're going to get pressure from the farmers who are delivering the milk to keep the milk price up or higher. And this reverse pressure is going to come from the shareholders to be able to get a greater return for their share, both in the form of a dividend, but also growth of that share. And right now, the farmers actually prefer, for tax reasons, to be able to have everything come back in a milk check as opposed to a dividend and a share growth. And so there's some real challenges in that space. Now, legally, I think they can get around this, but it'll be interesting to see what comes out on, I think it's Thursday, when they make the public announcement for TAF.
That's right. They have their interim results, and they're also going to be talking about their strategy rethink about where they're going as a company. If TAF doesn't come through, if Theo Spearings can't sell it to his guys and gals, what happens to Fonterra? Where do they go?
Well, I think Fonterra will be a smaller company without some capital structure mechanism than they will be if they do get one. If they're just relying on people wanting to, I was going to say grow milk, but produce milk to be the shareholders, they're going to be capital constrained, and they're not going to grow. I think 20 or 30 years ago, Fonterra was almost as big as Nestle is. Today, Fonterra's here and Nestle's way up there, and it's really the way you get capital into Fonterra at the moment is somebody wants to produce some more milk and sell it to Fonterra. Therefore, they're prepared to buy some shares and put some capital in. That Fonterra's bigger problem actually was that it went the other way. If somebody wanted to withdraw from the milk producing business, they could sell their shares back to Fonterra, and that was what Fonterra was really worried about in the first place. About 10 years ago, they introduced a bond or a preference share or some debt instrument to raise money. Since that got introduced, it was about a couple of $100 million they raised. They've actually bought most of it back because they see that doesn't work anymore.
So what should farmers be weighing up very carefully if you were advising them on how to vote on TAF?
Bluntly, when I look around the world, the producer of the raw materials, the farm gate, are typically peasants, right? And the farmers are actually going to have to watch that whereas they currently get a good price for their milk and not much money is made on the margin on the way through. I think in a different capital structure, there won't be much paid for the milk and all the money will be taken out at the other end. And you've got to figure out where, for an individual farmer, where you are in your life cycle and all the rest of it, which way you think would be better for you.
What do you think, Hamish, farmers need to weigh up now? Because let's face it, dairy prices are pretty good globally still. Things look pretty rosy at this point in time, but that could all change. Well,
I agree. There's two questions here, and I agree with Murray. There's a short-term one for farmers who are already dairy farmers invested in the land at the moment. They want to take it as a milk price now, which keeps the land prices up, and then they're going to exit strategy there to take the capital gain and walk away from it. And that's what New Zealand farmers want at the moment. And in the short term, they don't have to worry about how big Fonterra gets to compete globally. For the new farmers in the long term, Fonterra is going to have to change. And the question is are we going to have a crisis in 10 or 20 years' time and be forced to move to a corporate model, or are we going to have to move to a corporate model type structure now where we can get that capital inflow, but then you're going to get the big return is going to come to the capital, and the transfer pricing will then shift to a lower milk price. And Fonterra could do that today, but farmers have chosen, as the owners of that, not to take it as a dividend and a capital gain, and the share, but to take it as a milk price. And that makes sense, right? With New Zealand's capital gain structures, take it as a milk price, reinvest that, upgrade your farms, build your enterprises, sink it into land, and then walk away and sell the land at the end of it and pay no taxes.
But at some point, aren't farmer shareholders going to have to realize that maybe they can't have strict control if they want this company to grow globally?
They can have control, but they're going to have to think of some type of corporate model in the processing part of the marketing side where they've got, say, A and B class shares which allow capital to come in, and they're going to be providing a lower milk price into it because your B class shareholders will determine what your payment's going to be as far as the growth of the share price as well as the dividend. Or what you've got to do is start thinking about how Fonterra becomes a cooperative for the world. And so they've got to start thinking about how you bring farmers in as members of the cooperative and a range of other places around the world. I don't think that the TAF example, which has been put forward at the moment, is robust enough to be able to last the test of time in its current structure, and I'd agree with Murray in that space.
We'll all be watching Thursday's Fonterra announcements with great interest. Thank you, gentlemen. Thanks to my guests, Hamish Gow and Murray Weatherston. Be sure to check out our website for all the latest news. I, by the way, had a great time at the Dairy Women's Network annual conference in Rotorua recently. Murray, you weren't there. You're not a woman. Anyways, I met some magnificent farmers. Mr. Fonterra himself, Teo Spearings, packed out the room when he arrived to speak. His company donated $25,000 in prize money and sponsored the first ever Dairy Woman of the Year award. Well done. Won by Dairy NZ Director Barbara Courager. She's a very inspirational operator, and that got me thinking. So after the conference, I asked Teo who had been the most influential woman in his life. Here's what he told me.
My wife.
Why?
Why? Because we have traveled the world together, and we have 3 great children. She has been extremely flexible and supportive all my life, otherwise I would not have been where I am. And I know her already since childhood or since youth, so we know each other quite well. We have a strong developed relationship, so good foundation. And this is kind of the 5th region in the world where we are living in. All our children were born overseas, and she has always been a great supporter and still is. So without her I could not have done it, and I would not be able to do it in the future.
Good on you, Teo. Thanks for the holiday snap, too. Keep the faith. See you next time.